But many families, the mortgage they signed for is not the mortgage they are paying today because property taxes have quietly pushed their payments higher than they ever expected. Some scramble to cover the gap, others fall behind without warning. I'm Mike, the property tax guy. I'm a realtor, I'm an appraiser, and I also work for the assessor's office. These are their stories.
I received my first ever property tax bill for being a homeowner. I am nervous because this is a bill you're going to have to pay every single year. Of course, it's going to increase by no more than 2%, but regardless, the amount that's here today is probably going to be the amount that's going to be going forward, so I just pray to God that it's not a lot. But let's open her together. I'm nervous. There's a lot of information on here, and I have never seen a property tax bill, so I don't know what I'm looking for. Oh my goodness! I am shocked. My total annual property tax bill is $1,305, which is really freaking good. I was damn well expecting it to be like 3 to 4K and up. This is doable. I can do this. I was expecting it to be a lot more, so I definitely prepared myself mentally, but it's better than I expected.
And that's where I'm gonna start right there. So if you have a property tax bill that is uh $1,300, now in most localities that is not even a real scenario. Now the property taxes is pretty much based on the assessed value of the home, the property tax rate times that assessed value, and that's how much you pay for the year. You divide that up into 12, and that's how much you're paying every month. So for example, if I'm gonna bring my calculator up right now as we speak, and as we're talking, as I'm showing you this, I'm not going to put this on the screen for everybody to see. I'm just going to give you a quick example. So if you have a $300,000 home, assessed value, right? Let's say you bought it for 320, 350, 280, whatever, but the assessment on it is 300,000. And let's say your property taxes are $1.20. So you're times at $300,000 times 1.27%. That's $3,800 in taxes. For a house that's worth about $300,000, that's $3,800 in taxes. And you divide that up into 12, you are paying $318 roughly a month, right? $318 roughly a month. Now, for that same house, $300,000 taxes, 300,000, I'm sorry, $300,000 of the assessed value what the home is worth. Let's say we're going to multiply that by 80 cent. 80 cent. We're going to multiply that by 80 cents, right? So I'm going to take $300,000 times 0.80%. That's $2,400 in property taxes. All right. And you divide that up into 12, and then you get $200 a month. Now that's really good for a $300,000 home, a house that's worth $300,000, and you paying $2,400 in a year in taxes. That's how much the property tax matters, like the property tax rate. Now, for her to have $1,300 in taxes, we didn't know where you live at. We didn't know what type of house you have. And if you got a nice house, a nice renovated house, whether it be new construction or renovated, and you got a good amount of square footage, and you're paying $1,300 in taxes, I'm telling you, it's 100% chance that that property tax is going up. The assessor's office just didn't get wind of it yet. So I always tell people that when you go into these new houses and you about to buy a house, you can figure out how much your property taxes are going to be before you live there. Their assessor's office can give you a rough estimate based on the property tax in the area, based on the median value of the home or what type of house you're going to get, the square footage, and if you're buying a home that's going to be renovated or new construction, they can give you a good estimate, a good ballpark range. And they'll tell you the math. They'll split it up into 12 months and tell you how much roughly estimate you'll be paying. It's something we do on the daily, something we always do. You can talk to an appraiser. These are people that are independent of the transaction when you're buying a home, opposed to a realtor, the broker, the lender. All them people are dependent upon the sale of the home, opposed to your appraiser and their local assessor's office being independent. And they can help you out. They can help you out when it comes to challenging the taxes. They can help you out, your appraiser can, and also can help you out when it comes to what is the right tax value for the home. You know what I'm saying? So, but in her case, like $1,300, if everything's right on that, depending on where she live at, that's awesome. That's amazing. I just don't think the assessor's office seeing her house yet. That's just personal what I believe. Having $1,300 in taxes in 2025, I believe this video is recorded 2025 or 2024 as far as her video, I'm not sure. But in 2025 is crazy. It's crazy. Even in 2023, 2022, 2021, like that's crazy. $1,300 in taxes. Something is not right. Something's not going on, you know what I'm saying? But let's see what happens.
A new house, or if you're getting ready to buy a new house and it's a new construction, watch this video. So I just recently saw a post about a girl who was saying that she bought a house and it was the worst decision in her life. And the reason she said that is because she bought a house and at closing, she paid a certain amount of money for her property taxes. And then a year later, her mortgage doubled. And so this is what happens when you buy new construction. And I kind of want to like break it down for people who don't understand what they're getting into, because a lot of times realtors don't explain it. I don't know if they just be trying to get the sale or if maybe they don't have all the education, but it's
both. The realtors, they don't have all the education and they be trying to get the sale. So a lot of times, like I said before, these people that are involved in the transaction, whether it be like I said, the lender, the builder, the agent for the other person, your actual agent, you know, these type of people are they are paid based on the transaction, the percentage of the sale, opposed to your appraiser who is independent of the transaction. Like I said, I'm biased. I'm an appraiser. I'm a realtor too, but I'm an appraiser. They're independent of the transaction. You can call your assessor's office and see a good estimate of taxes that you're probably going to pay too as well, based on the specs of the house. And when I say the specs, I mean like the square footage and the condition. If you got a garage, if you got a basement, you know what you have, what you don't have, you know. But these people right here, like, they don't tell people how property taxes are going to go. Let's continue. I don't mean to interrupt.
common for first-time homeowners who don't have the experience. So I am someone who basically flips houses, but I flip them by living them and then I sell them once the market goes up. If you're buying new construction, you have to be careful, and here's why. So what happens is when a tax commissioner comes and they survey the land, they basically survey a plot, right? So what you pay at the closing table is not a real number. It's like a made up number. It's not made up, but it's like a percentage of what the real number is. Once there is a property, a dwelling, a house on the land, when they come back to survey it again the following year, now they're including the value of the actual dwelling and not just the plot.
And one thing too, I want to jump in and say too is what she said the following year. The assessor's office, realistically, they can do that at any time. Anytime. If they don't have the value of the home, let's say there's just land on the property and the builder started building things without letting the assessor's office know, and the assessor's office, they catch wind of it through the permit department inside their city or county, or by driving around and seeing it, or by somebody letting them know. You know, they see that, they apply that value. They can do it at any time. These things that we have done before on many different bases. You know, they sometimes they wait for the reassessment year if it's close to reassessment year, but most of the time they do it immediately, because the builder is supposed to let the local services know, and not just do things willy-nilly and just start building on land just because you got the tools and the resources. You're still building on the city's land, so you have to let the city know what's going on. And the local assessor's office, everybody keeps them out the loop, obviously so, because people don't want to pay taxes, you know what I'm saying? But like she's saying, that a lot of people, the realtors don't let people know. I mean, and I just want to help out investors too as well, and families, you know, to reach out to their assessor's office, because they can help you. They can give you a good estimate and the overall range of value of what you'd be paying. The lender knows too as well. We had lenders and title examiners, they call the assessor's office to try to see around the value, what that person will be paying. Not really title examiners, but mostly your lenders and things of that nature. So just be aware of that. You just got to be aware of that, you know.
All right. So that's why your mortgage can double, because what happens is your property taxes may have been $1,500 when you bought your house, but the real property tax amount was probably like $5,000.
And that's my question about the last video we just saw, right? It just seemed odd. $1,300 in today's market in 2025, no matter where you live at. Now, I'm not gonna say no matter where you live at, because I've seen some really nice houses for 120,000. Now you may be like, yo, Mike, the property tax guy, where you see that at? I've seen a certain place in New York, but it's in the boonies, it's in the country, very rare, you know, and it's not around a whole lot of local services. So you have those few far in between. But even in some of those cases, those houses are worth 300, 400, 500, $500,000 houses, you know. But property taxes, they can go up, they can go down. You need to let your assessor's office know. The realtors don't be letting people know sometimes what's going on. But you, as the buyer that's about to buy the home, you can let the assessor's office know on their behalf, because you're not getting them in trouble. You're not doing anything. You're just letting the assessor's office know so they can apply the value, so you won't get caught with your pants down and have some crazy payment. You know, for example, we get different types of lenders that will call me while working in the assessor's office and say, hey, did you guys got this value? We're like, oh snap, we don't got this value. We was looking around, nobody didn't let us know, we didn't get notified, because the city can be big. Sometimes cities have 14,000, 100,000 properties. They can't get to every one. But the thing about it, when they get to it, it will come as a shock. So you want to be in the know, so you won't be caught with your pants down.
All right. I'm actually just going to make this one really, really short and sweet and to the point. If you are looking to buy a home this year and you are getting sucked into the world of new construction because it feels exciting, it feels like there's no issues, it feels like there are no worries, please just watch this video very quick. So I actually am licensed all on the East Coast. 3 of the major companies that I have witnessed and watched my clients specifically have issues with are Ryan, DR, and Lennar. Now, obviously, every single person's scenario is super different, but I wanted to just share this because as someone who helps people purchase and finance homes, the most frustrated customers that I am speaking with right now actually live in these communities and are trying to sell this home to buy a different home that was built by a different person. So this is all I'm going to give you. Go to consumeraffairs.com and type in the name of any of these builders that you are looking.
And that's the thing. I only put this up a little bit. I'm not trying to really get into who's the best builder, who's not the best builder. I'm a realtor. That's not really my lane like that. Consumers, I would say do your own due diligence, look into that. Because there are people that build homes that are local builders that jack up things too as well. You know, one thing you want to look out for any builder, whether it be for Ryan Homes, DR Horton, Lennar, or your local builders in the area, is that who is doing the proper maintenance on the house, you know, upon construction, and did they take out the permits? You can call the permit department in your city or your locality to make sure that they did it. You can also reach out to your local assessor's office to make sure that they put the right value in that assessor's, and that the assessor's office know is going up, so they can apply the right value at the right due date and at the right time. Because you have to look at all these things. Now I'm talking about the financial aspect of things, not really when it comes down to the construction of things. I've heard good things about Ryan. I heard a lot of bad things. I've heard a lot of bad things about DR here, and I haven't heard a lot of good about them. Lennar, I haven't heard a lot of bad about them, but I'm starting to see some, you know. So these are things that's happening, you know, out here in 2025. Been happening for a while. I just want to let people know, like, look, when you are buying a home, you can call the locality, even if you don't own the home, to make sure that the seller is doing the right thing as far as getting permits. Like if the actual seller renovated it, and if he did the right things by letting the assessor's office know what's going on. Or you can call, you know, the permit department to ask them that they do the right things too as well. You may feel like, look, I'm telling on people, I don't want to do it, but it's better if they get that bill and you be prepared beforehand than you not knowing and you get the bill. But that's all I have for you guys. I go by the name Mike, the property tax guy. Have a blessed day.